This is Murray Bowyer with Boosted Profits, and I wanted to thank you for taking time to watch this. This is a quick video that I put together to demonstrate why this is the best time in history to consider the tax remediation programs that we offer with Boosted Profits. So let's jump right into this. First of all, some background. The government, in an attempt to stimulate the economy, has provided over $100 billion in tax incentives that are available to U.S. companies. But the sad state is that over 90% of the companies are not getting the benefits that they deserve and they qualify for. So what I do is I help small and medium-sized businesses get the money they deserve. We have a proprietary app that no one else has, and we identify the possible savings with remarkable accuracy in less than 15 minutes with a few key questions. And so the cool thing is that if the business owner agrees for us to execute these programs to generate the savings for the company, we only get paid if we actually deliver savings to the client. So it's completely contingency based. And what we do get paid is only a small percentage of the savings derived, which in theory the business owner would never have had to begin with had we not implemented the plan. So the cool thing is here we do all the work, take all the risk. So there's no risk in proceeding with this program. So let's talk about some of the industries that qualify for these tax savings and these tax incentives that are out there. Auto dealerships, manufacturing, commercial real estate, hotels, and construction companies, by the nature of their industries, are some of the best companies that qualify for the savings programs that are out there, just by the nature of what they do and by the tax laws that have been passed. However, almost any industry actually does qualify. These happen to be probably the best, but also medical facilities, staffing agencies are big, professional services, doctors, lawyers, dentists, etc. Restaurants are a great potential target for tax savings. Software companies, even funeral homes. The bottom line is any business that has building assets, at least in the high six figures to $1 million and up, or hires employees, may be a candidate. And when in doubt, let's just use our app. Get me in front of your business owner, and we can figure out within less than 15 minutes if there is anything that we can save them, so we don't waste your time. All right, and the question is, why doesn't every business owner take advantage of these tax remediation strategies? They seem pretty obvious. Well, many small companies are not, and their CPAs are not aware of this program. Some are unaware they qualify. Many don't have the bandwidth to implement some of this stuff. Everybody is pretty busy in their own businesses. And one of the particular strategies, which we're going to talk about in more detail, cost segregation, requires an engineering study, which may be out of the scope of the average tax professional. So let's just talk about an example that I just want to show you with some sample numbers of what we could do for a small manufacturing company, just to give you a feel for the magnitude we're talking about here. This is not peanuts. So let's assume a small manufacturing company that has a building valued at around $4 million, and it doesn't have to be new. It could be the last 5-10 years or so, with an annual property tax bill of, let's say, 50K, which I would say is conservative. Annual payroll of $2 million and 10 new hires a year. Let's just use those numbers just for discussion purposes. So based on our analysis, we should be able to get them a one-time savings for construction of between $250K and $300K, recurring annual property tax savings of $8K, recurring annual payroll tax credits of $90K, and recurring annual hiring incentives of $12K. So in the first year, we're talking, again, this is not peanuts, we're talking somewhere around the neighborhood of $400K, and then recurring in the vicinity of $120K. This first one is a one-time deal. These three here are all recurring. And these estimates are based on 17 years of historical data we have on thousands of companies using 2017 tax rates. Actual amounts, of course, will vary. Why is this the best time in history? So this is pretty exciting. So in addition so everything I've talked about up until now is stuff that we have been doing and we will continue to do, and the tax laws that happened only strengthen some of the tax strategies we have were contingent every year based on Congress approving, but now the tax laws have been permanent in many of these cases. So, but why is this the best time to share these programs? Well, we have a unique small window of opportunity created by the TCJA Tax Cuts and Job Acts. So you know that the corporate tax rates dropped from 35 to 21% in 2018. All right? So that's good for business. But the problem is that the deductions that you can claim for expenses also get reduced from 35 to 21%. So let's talk about cost segregation, which is one of the strategies that we implement. It's the one with the one-time cash flow boost, if you will, based on the cost of your property. So it's based on the value of the property. All property, typically, most businesses that don't implement cost segregation, they buy a business, they buy a building, they implement a depreciation schedule that says that every year they write off 1/39th of the cost of the property when filing taxes. So what cost segregation does, without getting too accounting on you, is that it's a legal process that identifies the components of the property that are eligible for accelerated depreciation. So you get a large one-time immediate cash flow. Most people do not own a building for 39 years. They either sell the business the business gets merged, they do renovations, somebody dies, the business goes out of business, whatever. Most businesses are not able to claim all the tax depreciation that they're allowed over 39 years. So what cost segregation does is it drastically speeds it up so that there's a huge cash flow windfall to the business owner. All right, so when we implement cost segregation using the 2017 tax rate, which is 40% higher than the 2018 tax rate. Now, even though the income gets a benefit because of the tax reduction, like I said before, the deductions take a hit. So you got a 40% higher cash flow savings, using last year's tax rates. Okay? Businesses are currently, right now, and this is why this is the best time to consider this program right now as I speak. I'm talking February 2018 is the time of this recording. Businesses are currently preparing taxes based on their 2017 activity. So in order to capitalize on this loophole, I'm calling it, in the tax rate changes, you must implement cost segregation into the 2017 tax computation. I hope that makes sense. That's a 40% windfall. If you wait until 2018 to do cost segregation, even though the program still exists, and we're still going to be doing it, and we're going to be doing it indefinitely, you're going to lose this one-time window with this 40% higher cash flow that you generate. Now, there's a lot of things to consider. The property has to be on the books by the end of the year 2017. Even if it was 5 years ago, that's okay, but it has to be an asset valued at the end of the year of the year we're filing taxes to qualify. If you're still doing renovations in 2018, that won't qualify. Age or purchase date of the property is not a factor, although more recent equals more savings. Anytime the property changes hands, the clock is reset. So if you bought a business that had already done this strategy 10 years ago, let's say, and now you're 2017 and you're a new business owner owning the property, you can do it again. The clock resets. I hope that makes sense. So in our example that we've talked about in the previous slide, this is a one-time windfall of $100K just because of the timing here. Okay? We already talked about what those savings were, somewhere in the vicinity of $400K the first year. But if we do this cost segregation study alone, just this study alone, the other programs, the windfall isn't so great, so because of the amounts, but because of the nature of this, this is a $100K difference. I hope that makes sense to you. So the conclusion I have is that every U.S. business should not close the book on 2017 without considering the impact of cost segregation, because once this window is passed, the opportunity will be gone forever. So why don't we schedule a quick call and see what you are eligible for, not only for cost segregation, but for the other programs that we have in store for you. So if you're interested in learning more, let's talk. Here's my contact information. I'd love to get on a call with you, and again, in less than 15 minutes we can figure out whether we can actually save you some money or not. Thank you very much for watching. This is Murray Bull, your Boosted Profits, and I look forward to hearing from you.